few years, we've also seen sharp swings, reminding investors how volatile precious metals can be in the short term. For nearly a decade, silver returns were negligible and most market participants had written it off. But our next guest was among the very few who stayed bullish on silver even when sentiment was completely against it. And the big question now, after the recent rally and the fresh bout of volatility, does silver still have legs? Where does the risk reward stand currently for both the precious metals? And to discuss this, we are now joined by Mr. Sahil Kapoor, SVP, Head of Products and Market Strategist at DSP Mutual Fund. Mr. Kapoor, afternoon. Thank you so much for taking your time out and joining us here on ET Now. You were bullish on silver when no one else was. This was what in 2022, about 5 years back. Bold call indeed by you. What made you so bullish on silver back then in August 2022, and what is your thoughts and your view on the precious metals basket now?
Sure. I think it is all about the risk reward, the word that you used. Back in 22, it was quite clear that the silver market and gold both were in deficit. The supply was lower than the demand. And the idea was if a buyer stepped in, the prices will respond significantly. And at that time, our theory was that particularly for gold, buying could come from institutions, ETFs, etc. But surprisingly, in 2022, for the first time, we saw 1,000-ton annual purchase by central banks. And that was the time we also highlighted that this is the first time that central banks have bought 1,000 tons of gold, and it's a big deal. And if it repeats, then possibly prices will respond significantly. For silver, it took a few years for a new buyer to emerge, but the buyer eventually came in the form of ETF, and you could say speculative momentum buyers, which took the prices higher. So the idea was a very tight market, and if any buyer stepped in, it would have done wonderfully well. Second is that most of these assets, as you said, are volatile and cyclical. And over the past 10 years, their dollar returns were very, very low. Secondly, huge amount of money printing had happened post-COVID. The numbers that we saw, we have a theoretical framework to value these precious metal. According to our framework at that time, gold was undervalued by about 50%. So although prices were at about $1,850 or so, our model showed that it should have been closer to 4,000 to 4,100. And for silver, the prices could have been, at that point, our model showed theoretically between $54 to about $70. This was back in 22, 23. At this point in time, I think the risk reward has flipped with the rally that we've seen. And there are certain reasons based on which I think currently new positions in both gold and silver carry a lot of risk, and investors will be better off, not initiating any fresh long positions or purchases in their portfolio at these prices.
Okay, so the risk reward at this juncture is not favorable, and perhaps you should not venture into precious metals at this point in time. But if someone has positions, would you recommend to stay put?
So one thing is that let's say we talk about gold. I think gold is a more of an investment asset, and you can't say the same thing for a silver or for that matter for any other metal. So gold, I think if you had, let's say, precious metal in your portfolio prior to 2024, it makes sense to continue in a neutral manner. Let's assume that you had a 5% steady allocation to gold throughout, let's say, last 5 or 10 years. There is no reason to change it. You should continue with that allocation. But if you are overweight, if your positions have become overweight in your portfolio, that 5% has become 10, it is time to bring it back to that neutral position and then carry it forward. That should be the reason. And probably let me highlight why am I saying that risk reward has flipped. One, our models show that for gold, about 4,500 to 4,600 is the fair price. Of course, market can continue to be much more bullish and they can take the prices higher. So let me also tell you that I don't know what is the peak price or what is the high for gold. Maybe it is 5,000, 6,000, 7,000. I don't know. But it is very difficult to calculate what is my risk reward today. We think that prices are already fairly valued, gold. And for silver, I think they are significantly overvalued, from maybe the range of $75 to $77 should be the fair value. Second is that look at the primary driver of demand. For the last 3 years for gold, the biggest gorilla in the room were the central banks. They were buying about 1,000 tons every year. In 2025, they actually bought 20% lesser. That means central bank demand has gone down, not up. Second is they were replaced by momentum buyers, institutions, and ETFs. Their demand, which was negative in 2024, was 800 tons in 2025. Third, the biggest driver is the jewelry demand, which is always very, very steady. So you can think jewelry demand is roughly about 50% of the global supply. So if you have 5,000 tons of supply, 2,500 tons should go to jewelry sector. In 2025, that number was just 1,600 tons. It was down about 25%. So the two largest steady buyers, which is jewelry demand and central banks, both have taken a backseat, and therefore prices are fully valued. So as an investor, I would be better off waiting for better opportunities rather than to enter at these prices. And therefore, as I said, have a more neutral stance rather than jumping in and buying at higher levels.
So neutral stance, and if you're invested from an asset allocation point of view, then it's better to stay put. But if your allocation has risen, then perhaps you should book some profits. That's the word coming in. But Mr. Kapoor, if you had to choose one amongst the two, gold or silver, which will that one precious metal be?
So my guess is that majority of investors, not only today, but always will be better off just having gold, right? Because it will provide the steady exposure. We published data which shows you that over 20, 25 years, gold has performed really well, even over 50 or 100-year periods. It has the potential to beat inflation. Specifically in emerging markets, the role has been very, very strong. So I think it is an asset. If you're using it as a diversification asset, there is no reason to look anywhere else. Silver, you could say that it can be hermetic in your portfolio, which means that just like vaccination, small doses can make you much stronger, but you have to have those small doses at the right time, right? So an asset like silver can be part of the portfolio maybe once in every 10 years when it becomes really undervalued, and you can buy it in small doses in your portfolio. It can really, help the portfolio grow. But I don't think it
Right.
can become a steady type of an allocation unless you are inside a multi-asset allocation kind of a framework.
Right, understood. We completely get that point. So neutral stance coming in. Mr. Kapoor, thank you so much for taking your time out and
Thank
joining
you.
us here on ET Now. And we look forward to interacting with you more often. On that note, we need to slip into a very short break, but more news and updates will continue on the other side.